April. As I was updating my restreaming device this morning, it looked like maybe yesterday's date didn't save. So I don't know if the video came through and didn't have the correct date. Sorry, that's on me. My software didn't save it. So anyway, today is the 24th of April. It is Friday, and just here for another quick market. Just give you some ideas around key levels that you could potentially trade, different ways to trade the market, and then I'll let you get on with your day. We're going to start off over here on the Forex side of things. Got a strategy that we've been talking about here pretty consistently for quite some time, just utilizing a breakout trading strategy around the open of the new foreign exchange trading session. And we utilize that strategy just by simply looking at which currencies are actually moving, which is the same way we can trade Forex intraday, by the way, is if we want to trade foreign exchange a little differently than we might trade other instruments, right? When we're trading Forex, we're looking at what currencies are actually moving, and then we pair those together. And that gives us the best opportunity to find a currency pair that has that potential movement. Doesn't mean something's going to happen. Again, I say this all the time, no matter what we do or how we look at it or what system we use, none of that means anything is going to happen. It means that you've got, whatever your trading method is, it means that things have lined up to give you a reason to take action that should give you a trading edge, some sort of positive probability in the marketplace. Everything that we do in trading is odds and probabilities. That's what it comes down to, odds and probabilities, and those don't change. That's math. That's how things work, and it's a universal piece that if we can get that through our head, that's how we want to operate. That's going to create that long-term success for us. So anyway, let's kick it off. I'm going to try to keep it shorter than 30 minutes today. I always say that and end up going 30 minutes. I'm going to try to keep things to the short side today because next week I'm going to do another series again for 3 weeks in a row, talking about a specific trading strategy, one strategy per week for 3 weeks, right? So just a very simple, basic strategy that you can implement without the need for a lot of different tools and indicators and things. So I'm going to talk less about strategy today, knowing that we're going to get into that again next week, and then for the weeks following that. The goal there is to help you develop some sort of a framework for your trading plan, because again, I don't want to just sit here and feed trades. I stopped doing that last summer after I started the channel because it's just counterproductive, honestly. You're never going to learn how to trade if somebody just gives you trades all the time. You need to learn the basics. Even if you're going to work, even if you're eventually going to use an AI or a bot or something of that nature to trade from, still having a good fundamental understanding of how the market works, how a trading system works, gives you that better opportunity to buy into what's actually happening there and how it's making its decisions, right? All right, so with that said, that's like 5 minutes on more stuff that I needed to get into. So let's jump over here and have a look at the currency market. What's going on right now? Well, we're using a very simple tool. These are available all over the internet. It's a currency strength tool. There's actually one available on the website on makemoneyfromyourlaptop.com. If you'd like to support the site and subscribe to the tools, I say subscribe. There's no subscription, it's one fee. You can get access to this one and many other tools that we utilize here. But this shows you currency strength and the strength of each major currency against the other. And we utilize it in order to see, again, as I mentioned earlier, what's happening in the marketplace. We want to be able to see which currencies are strong, which currencies are weak, which currencies are actually moving, and then pair those together. Because very often, currencies just kind of move in lockstep with one another, and they don't really have any real gains. It just kind of stays in a sideways motion. So if we've got currencies that are diverging from one another, that tells us that we have a better opportunity for those currencies to potentially move and create some sort of an intraday trend. Now, doesn't mean it will. Again, I just want to reiterate that just because it's showing some movement doesn't mean it's going to continue moving, but it's telling us, hey, we've got a good opportunity, especially depending on the time frame that we look at this during. It means you've got a good opportunity for something to continue potentially moving here. So, right now, what do we see on here? Well, we see that on the strong side, we have the euro. The euro is a strong currency and has been for quite some time coming into this new U.S. session. For weak currencies, we've got the yen and the USD. Both of those are weak currencies. Now, Euro USD, I don't typically like trading that pair, but what is that telling us? Well, we've got the euro and the USD, as a potential trading opportunity here. How does that stack up if we go over and do a little bit of a chart analysis on it? Well, if we go over here to the Euro USD, we can definitely see that it's been in an upward trend. So far today, it's hit a bit of a range here. Currently, it's moved 78 pips. Its average, yesterday it moved 90. 5-day average, 15-day average is 74 to 84 pips. So, we've already moved 78. So, what this blue box here is telling me is this is just simply painting a 10 pip range above and 10 pip range below where the current session began. So, what I'm looking for here is something that could potentially break out of the top of this box with some momentum and then carry me on for 20 pips, just to lock in 20 pips of profit. I'm just looking for a quick hit, right? What is the probability of this continuing on 20 more pips from here? Well, we've already moved 78 pips for the day. Our average is 74 to 85, call it 84, 74 to 84. So, what's the likelihood of this moving 20 more pips? I mean, could it? Yeah, absolutely. It can move 100 more pips. It can move 200 pips, But under just regular market conditions, without the catalyst of news or any other impactful events coming up, what's the likelihood of that going, 90 to 100 pips to get us our additional profit? Well, not great. I mean, it could happen. It absolutely could happen. But, is there a better choice? Is there a better opportunity? What about the euro versus the yen? Let's see what that happens to look like. Where's the euro versus the yen? Oh, there it is. So the euro versus the yen. Let's have a look at that one. Whoops. It's hiding from me over here. Euro versus the yen. So we got, again, so yen is also a weak currency. So euro versus yen, it's moved 70 pips, averages 80 to 90 here, so about the same. Could we, this is probably a little better opportunity, if we've moved, versus 78 to 85 or 84, 70 to 90, probably still some opportunity there potentially, right? I mean, yesterday it moved 120 pips. It exceeded its range yesterday. There certainly is the opportunity, probably a better opportunity than the USD to continue on and meet that criteria. We are in an upward trend, so if we go long on this, we'd be trading with the trend. And also, if we look at what's happening with our volume detail, we can see that the volume currently supports the buying pressure as well on this. So we're looking at a lot of indication here that gives us that potential positive probability of this moving in our favor. Now, it doesn't mean it will, but I can certainly enter a buy order up here at the top. And if it breaks through this top area, hopefully it's got some momentum behind it, and it'll carry it through and push us into profit. If not, worst case scenario, and never even touch me in to fill the order. Well, if that happens, we'll give it a couple hours. If it doesn't fill the order, then we'll just shut it down, and we haven't lost anything. If it does come to the top here, and it can very easily push to the top and then reverse down and stop us out. That's the worst case scenario. We'd have a 1% or 2% loss depending on what we set our our parameter to be based on our own risk tolerance, right? But if it does break through here, hopefully it's got a little bit of momentum. And the way this breakout box works is as you break through and an order is entered, it sets a stop. Well, it's already set up here once we enter this. So I've got my entry point set, I've got a stop loss set, and I've got a take profit point set up there 20 pips beyond. It trails the stop pip for pip for us. So we've got a fixed take profit point, and then we've got a trailing stop behind us. So what does that do for us? Well, we've given ourselves a little bit of an advantage looking at which currencies are moving and which currencies are diverging. We're trading with the trend. We're trading in the direction that our volume detail also tells us. And then as we take that trade, we have a fixed profit point and we have a trailing stop. At this point, we're always going to win 20 pips if or when we win, but we're always going to lose less than 20 pips. So we've stacked that deck in our favor mathematically. We've given ourselves a little bit of an edge by looking for currencies that have a good probability of moving or opportunity for moving. And now we've also further stacked the deck by using good money management and allowing us to always win more than we lose. And that's the recipe for success over the long term. Will every trade be a winner? Absolutely not. No, it's impossible, right? But your winners will outweigh your losers, which is what you need to have your advantage over the long term. So there you go. We'll enter that one. We'll let that one sit. Talked about the whys behind it, weighed out two potential opportunities. We chose one based on what we saw there. So let's get that out of the way, and we'll go over here to the futures market. Now, when I'm looking at the futures market, it's a little bit different. For both futures and for crypto, I use support and resistance along with some moving averages to identify what the bias is on that specific future, on that specific contract. So what we're looking at here is when we're beginning with the ES, the S&P. We're starting with a 4-hour chart. So I'm looking at my 4-hour movement, and I can see here that on the 4-hour time frame, our bias is long. Right? Same thing it was yesterday, the day before, the day before that. We've got a long bias on the S&P. That's telling us that we'd be, based on the 4-hour time frame, we'd be continuing to look for potential buying opportunities, right? But then we chunk that down to the 30-minute, and we see how that 30-minute is looking. So do our biases agree with one another? Is the 4-hour bias the same as the 30-minute bias? If they agree, then we go, okay, great. Those two are in agreement. Now we can confirm that we might be looking for long trades. So that's what we'd be watching the market for right now if we're trading with that trend, and we'll talk more about this next week as we get into different trading styles, because there's obviously different time frames we can drill down to as well when we're looking at something like this. You don't have to use the 4-hour and the 30-minute. You might use a 30-minute and a 5, or you might use some other combination thereof. But the ultimate process here is just to identify, that we have to get some indication of what direction we want to trade. Otherwise, we can just find a reason to trade at any point during the day. We've got to have some sort of a filtering system that says, hey, when these things happen, when all of these, when a trade sifts through all these different filters, and if there's a result at the bottom, then we take a trade. And if nothing comes out the bottom because some of the filtering criteria are off, then we don't trade, right? So we have to have something that tells us when to trade. That's your trading plan. That's your filtering criteria, right? So, we're over here. So I utilize that 4-hour and then the 30-minute to identify what's my bias. Are they in agreement? If they're not in agreement, then we can just stop right there and not continue forward. Because if your 4-hour and your 30-minute biases aren't in agreement, then there's a good chance that we're going to have this kind of choppy day as trends are maybe trying to figure out if they're going to continue on or if they're going to reverse. So why get involved in that choppy mess? That's when we have extended amounts of drawdown, right? So, and you're always going to have drawdown, by the way. This is part of trading. But, if you can avoid some of that, why not avoid it? So anyway, so if we're looking here, 4 hours in agreement with the 30-minute, that's telling us we'd be looking at potential long trading opportunities. Now, if we're looking to go long here, we've got a couple of things. So we're looking at kind of the same boat that we were in yesterday, by the way. It's about the exact same boat that we were in yesterday. 2808, 2800 as our resistance points up here. It's pretty well respected. We saw it play around quite a bit there at that level yesterday. When we came in and we're talking yesterday, we mentioned 2800, 2808 is where my resistance line had been, and this is all drawn based on a 4-hour chart, by the way. And as 8 o'clock, 9 o'clock Eastern, 9:30 Eastern, as the market went into regular trading hours at 9:30 Eastern, 8:30 my time. We saw that this continued to begin to move up and then broke through that area, gave us some opportunity to trade. But then it did come back in that day, and it pretty well respected what had been a resistance point had been a support point after it broke through there, became a resistance point for us. So here we are back in the same boat. We've got this 2800 psychological level, 2808, 2810 area up here based on our 4-hour charts as potential areas to look at and trade from. So if we're looking to go long, so the 30-minute bias is just flipped, and obviously we'd want to wait until the regular trading hours begin at 9:30 Eastern time, 8:30 Central. If this is still a long bias at that point, we'd be looking for potential long opportunities. There's a couple of ways to trade that. We can either trade a breakout, so we can look at key areas for price to move beyond those key areas and break out of that, or we could look for a bounce, meaning price pulls back to a key area, and then we would buy it off of that key area, hoping that it bounces from there. Or there's a combination strategy that we could talk about, and we'll get into all of these things next week, or over the next 3 weeks, really, as we deep dive into each of these and talk about how they work and then the pros and cons behind it. Because again, no trading system is perfect. You've got to find the trading system that's perfect for you and perfect for your mindset, right? The goal here is just to provide you with a good foundation that you can create something from and then grow from and implement something consistently every day, which is going to create your opportunity for long-term success, right? So, if we're looking at this, we're looking to trade long, our 30 minutes in agreement with our 4-hour, and if that's still the case by the time we roll into the regular trading hours, then we would continue to look for that. But anyway, breakout areas, 2800, psychological area here, big whole number. We break above 2800, breaking through there could be a great opportunity to continue to trade with that trend. 2810, if you want to be a little more conservative, wait for it to break through that 4-hour resistance point. We break through 2810, great opportunity for potentially looking at buys. You're trading with the trend. We're looking for pullbacks and then looking to buy off of a pullback. Looking here on the 30-minute time frame, 2790 is certainly setting up as an area that would be key support for us at this point. 2790, even down here 2780, really probably 27, what is this, 77, 2777, 2778, right. Could look for this to bounce off of and continue on. Obviously, the 4-hour time frame, the support level is down here at 2750. So that would be certainly a key area to look for support. But the goal is, at first at least, to make sure that your biases on different time frames are still in agreement, which would support the direction that you're looking to trade there. Over here in oil, oil has been in a downward trend the last couple of days, though it started to pull back a little bit, started to push up, started to gain a little bit in price. We're back up to the levels of $17 oil. Pretty amazing to see it that low, but ultimately oil is in a downward trend if we look at the 4-hour. Now if we go over here to the 30-minute and have a look at this, oil is in an upward trend. So just like yesterday, right? Again, just like yesterday, 4-hour bias is down, 30-minute bias is up. So one's telling us to go short, one's telling us to go long. What do you do with that? Well, if your criteria says that if your first filter is that both of those biases need to be in agreement, then you stop. You don't do anything. You don't trade. Sometimes the best trade is the trade that you didn't take at all. Just don't take a trade, right? That's the case right here today. Now, with that said, if your time frames are different, or you're trading on a lower level, or your lower time frame, you might have a different combination of filters to give you a different bias, right? So, if that's the case, we've still got this key area down here, basically 1600, 1586, where price pulls back on a 30-minute. We can continue to look long there. I don't know how much long oil has in it, but these two are definitely not in agreement. So, probably the best case opportunity here is to simply not force it. A lot of folks have been calling the bottom on oil. It can't stay this low forever. Well, that might be true, but just remember, anyone that's been calling the bottom of oil has been probably doing that since oil was at 50. So, can't go any lower than 50. Oops. Can't go any lower than 30. Oops. Can't go any lower than 20. Oops. Don't try to be a hero. Don't try to call the bottoms. It's ridiculous. Just like don't be a hero and don't try to call the tops either. Just because something's hit a level that you've never seen before doesn't mean it can't continue on. Anyway, I'm going to save my colorful commentary for something else. So anyway, oil, it's mixed. The 30-minute, the 4-hour mix, don't worry about it, right? Don't worry about it. Over here in gold, what's going on in gold? Well, 4-hour in gold is up. Our 30-minute in gold is also up. How do we trade that? Well, just like we talked about yesterday as we were coming into the new regular trading hours, we would either look for a break of key areas, or we'd wait depending on what your trading strategy is. I say either because you've got to have a trading strategy. You've got to have something that directs you on what to do. Not me. Something needs to direct you based on your trading style, based on your personality, based on the back testing that you've done. You've got to have something, and I'm going to give you the framework for that over the next 3 weeks. We're going to dig into it. I want you to do the homework as we talk about it, and do the tough stuff that's required to figure out what your actual trading plan is, because it should be something unique to you that's a combination of what you've learned from me and from other people. No one person has all the answers. You've got the answers within you if you listen to it and take the time to do the damn homework and actually make an effort to be successful, and don't stop blaming other people for your lack of success because you tried this system, you tried that system, and this didn't work, and that didn't work, and that didn't work, and I tried this, and they're all scammers, and they're all frauds, and blah, blah, blah. Look at the freaking common denominator that is probably you that are, actually, I'm sorry, I'm getting off on a damn tangent, but it frustrates me so much that people won't take responsibility for their actions. And, they bounce from system to system. They talk to trading educator after trading educator, and they write terrible things about them online and how they're frauds and how their systems don't work and yada, 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 yada. And granted, there's some stuff out there that's absolutely asinine, but I know a ton of these guys that are trading educators, and their stuff works. The challenge is the people that work it don't work. They don't ever take the opportunity to truly learn it, make it their own, and then they just keep wanting to blame somebody else for their lack of success, when it really comes down to the person executing the trades. It's who's between the keyboard and chair. It's you, it's me, it's the person executing it, and that's what you've got to come down to. If you've been through 6 trading educators and you're still not successful, accept the fact that it's probably you not doing the work. So anyway, I'm going to teach you how to do the work. We're going to walk through 3 dead simple trading strategies over the next 3 weeks so that you can actually learn something, but you'll only learn it if you're willing to put in the work and put in the effort to figure out what your trading style is and start executing something consistently. So anyway, gold. That was a long tangent on gold. Gold, it's I started a little ornery this morning, but man, I get these emails and these comments, and I see comments on my friends' pages, and it drives me bonkers. It drives me bonkers. So I apologize. If you're one of the ones putting in the work, obviously don't take it personally. Rule number 4 on the 4 agreements, right? Not rule number 3. Rule number 2, don't take it personally. Anyway. Gold. What's going on with gold? I just said it's long. 30 minutes is long, 4 hours long. That's telling us that we're looking for long trades if we're trading gold. Ways to do that: look for breakouts. We've got key areas. We're 1755 on the 30-minute over here. It's looking pretty solid as what's been a resistance point. We'll see where that goes as we get into regular trading hours about an hour from now. We can look for pullbacks down to 1750, or we can look for breaks above key areas here. So far this morning during off trading hours, 1760 reached the top. But I'd certainly like to, like with anything, get a little bit of a discount on it. So if gold can pull back a bit, then see if we can't get in at a little better rate down there. Over on the crypto side of things, we're continuing to see movement. We go into these little channels where crypto just, this is ETH on the left side, Bitcoin on the right side. We get into these little channels where things just kind of go sideways for a bit and then, continues to move from there. We've got some key levels yesterday. We were trading around this 184 area over here. Finally, it's pushed beyond that. We're up to 188. It actually went up to 192. These are existing levels on my chart, by the way, guys. It does what it does. These are based on 4-hour trends, which I'd have to really zoom out for you to see where these are. But ultimately, we can see where this was previously a level of support that then became resistance, and now it's resistance again as we've fallen below it. So we need to break above 192 if we're going to continue higher. But for right now, the trend is up on the 4-hour, looking at Ethereum. So same process. If you're looking for breakouts, right now we're trading below this, so we'd look for a break of 188. If we're looking for bounces, wait for it to come back down here to 184 and see if we can't bounce off of 184 and then continue on. So it just depends on what your trading style is and how you're going to look at that and how you're going to trade it. Bitcoin, same deal. We've been just kind of hanging here at 71.70. We blew through it, and we've come up to blew through this next resistance level as well and came up to 77.40 and repelled off of that. So what do we do now? Well, we're in an upward trend. It looks like we're sideways, but really we're in an upward trend. The trend is still long on Bitcoin here. So we're in an upward trend. We look for a couple of things. Either a pullback. If we can pull back to 7,400, we'd look to buy it off of 7,400, or if we break through some tops. If we look here, it rejected it at 77.40, what is the 77.50 area, rejected off of this, but we've set up another resistance area here at 7,600. So it's been hitting its head on 7,600 quite a bit. So if you're looking for breakouts, look for it to break above 7,600 if you're playing pullbacks. And again, we'll talk more about these over the next 3 weeks. We're going to talk about some different trading methods that we can utilize here. But look for it to pull back to 7,400 if you're looking for pullbacks. But the trend is still up. We're still on a long trend on both of these. So there you have it. No need to update what's happening in Crystal. We're still eking back some of those losses that we took over the spring break time frame when everything went off a cliff. And as I mentioned before, just waiting for that to come to a certain level, then I'm going to peel off some of that account and put it into a fully automated system that another friend of mine, well, same guy that created CrystalBot has as well. So anyway, there you have it. That's it. Man, I'm below 30 minutes right now if I end it. So I'm going to end it. Have a great day. Less than half an hour. If you like what I'm talking about, share with your friends. And I hope you're getting something out of the education every morning. Bottom line with all of this, find a process, document the process, stick to the process. There you go. Have a good day. Bye.